Thank you for that introduction, Gwen. Thank you all for being here this morning on this rainy Friday. Let's get started. All right, here's our forward-looking statement. There'll be a test on this tomorrow, so make a quick study of this. All right, for those of you who aren't familiar with us, EMX takes a three-pronged approach to our business model. We have royalty generation, and by that, what we do is we utilize prospect generation to organically build our royalty portfolio. So we go out and acquire the prospective mineral real estate around the world, do some basic inexpensive exploration on that, i.e. we don't do much drilling on that, hardly any at all actually, because that's very expensive. We leave that to our partners. And then find enough signs of mineralization or outright mineralization to entice another company to come in and buy or partner that project. From that point on, we are no longer writing any checks on that property. And then when we vend that property off to our partner, we hold back a royalty on that. So we're largely using that organic process to build our royalty portfolio. Then we supplement our organically derived royalty portfolio with royalty acquisitions when we can find those at favorable pricing valuations. Then we also augment our organically derived portfolio and royalty acquisitions with strategic investments. So the best example of that would be our Malmysh investment. That was a project that we were involved in Far East Russia, which began 8 years ago. We put $13 million into that over 7 years. And then a year ago, last October, we were able to monetize that investment, and that dropped $88 million into our treasury. So we are well cashed up right now, and we're looking to buy cash flow. And when I say buy cash flow, I mean we're looking to buy cash flowing royalties or a royalty, or embrace another strategic investment that would lend us immediate cash flow. All right, these are the areas of the world where we are engaged. Our biggest areas of engagement are in Nevada, in the U.S., that's primarily for gold, and then in Arizona for big copper. And then Norway and Sweden for a broad host of metallic commodities. We also have opportunities in Australia, Turkey, royalty properties in Haiti, and then we have a big opportunity in Serbia where we have a 0.5% royalty on the Kukuru Peki discovery there that Zijin is now advancing. And we'll look into that a little bit more in a slide coming up. This is our sort of our value pyramid. So you can see the bottom part of the pyramid right there, the dark blue. Those are properties that are in our portfolio that we're doing some basic exploration on, trying to add some value there and generate some interest from other companies to partner or buy those properties. Once those properties have been partnered, then they move up to the lighter blue portion of the pyramid, and we have stopped writing checks on those. From that point on, someone else is developing those properties, and we hold a royalty on those properties. And then the sort of the light yellow portion of the pyramid is where they're in resource delineation or development. And then ultimately, we want those to ascend up to the pinnacle of the pyramid where they're actually in production, and then we're capturing a production royalty from those. Just to give you an idea of how the companies sort of divided up, about 37% of our properties right now are available for partnership. About 56% of those are in royalty status. And then you can see we have a few percent in the alliance projects that we're involved with other companies and strategic investment. Commodity-wise, our wheelhouse is really in copper and gold, but we embrace other metallic commodities also. Polymetallic things, those could be lead, zinc, silver. Those could be nickel, platinum group element, cobalt properties, things like that. And then geographically, you can see how things are divided up too, which we looked at in the map on the previous slide. And you can also tell an awful lot about a company by the company that it keeps. And we're in bed with people like Newmont, Rio Tinto, Anglo American, Hud Bay, South 32, Zhejiang, so some of the largest mining entities in the world, and then on down through the spectrum to smaller Canadian juniors. So we've got a lot of partners around the globe advancing our assets for us. Our top shareholders, Paul Stevens out of San Francisco, owns about 15% of our shares. Sprott Global, this is Rick Rule, and his clients have about 22% of them. And then EMX management directors and employees have about 15.8%. And one thing I'll point out there is our founder, president, and CEO, David Cole, has purchased 646,000 shares of EMX stock in the past year. 646,000 shares. So if the CEO is buying, it might not be a bad idea for other people to follow him in. And always remember, a CEO sells shares for a lot of different reasons, but only buys them for one reason. Newmont is also a shareholder at about 6%. Adrian Day Asset Management and his clients own about 5%. Antofagasta, the big copper producer out of Chile, 1.7%. And then U.S. Global Investors, that's Frank Holmes Group out of San Antonio, Texas, owns just over 1%. And then there's a big hedge fund out of Switzerland that owns about 5%. Shares outstanding, we have a tight share structure with about 82 million shares and about 90 fully diluted. And keep in mind that we've been publicly traded now since December of 2003, so we've been publicly traded for over 16 years now. Cash, we have about $74 million Canadian, about $3.8 million in marketable securities. So those are share payments that we've taken for companies. When they come in and partner with us, then they commonly pay us with shares and or cash. And those are securities that we hold in these other companies. And a lot of times we're able to realize a substantial amount of appreciation from those shares from our partners. And then we have a number of some other cash that is bound up as available to us in bonds and things like that. Moving on, let's take a look at hardshell skarn, or the Hermosa project, also known as the Taylor deposit. So this is owned by South 32 now, and we have that 2% net smelter royalty there, and that is uncapped and unbuyable. I bet a lot of you out there are familiar with this project. This has been a big discovery, and that's being advanced right now. And of course, we're immediately adjacent to that to the south, and there's actually some drill holes in there with some impressive grades of mineralization. Scandinavia, we've got a lot of opportunities there. We are now the largest landholder of mineral rights in Sweden and Norway combined, actually. So and those are polymetallic opportunities, volcanogenic massive sulfides and carbonate replacement deposits and iron oxide copper gold projects, and so on. We have 6 projects that we sold to Goldline Resources. 2 of them that we've optioned off to Playfair Mining, who I see right out here in the audience today. Thank you for coming. 4 metallic projects to Nora Metals, which is based right here in Vancouver. And then Slatberg to Sienna, who's come up with some very interesting drill results there. And then a number of projects to Boreal. They've got some really interesting projects, particularly at Gumsberg. And then Ryder Hutton, a big IOCG project we have with South 32, which is a huge company. So there's a lot of activity there. And we'll be partnering more of those projects in the coming months. The Good Pasture royalty and equity investment. This is really interesting. So this is in east central Alaska on the western end of the Tatina Gold Belt. The Pogo mine, which you can see there just above the P in Pogo, is owned by Northern Resources out of North Star Resources out of Australia. That was bought from Sumitomo Between the resources that they have in the ground and the gold that has been mined, that is a 10 million ounce gold deposit. Now, if there's something that we know about gold deposits is very large gold deposits like that very rarely occur by themselves. They occur in clusters. Interestingly, there was a lot of open ground right on trend right around the mine. And our colleagues over at Mill Rock Resources recognized that open ground and thought that ground was highly prospective. Their treasury was a little low at the time, and they weren't able to afford to go out and stake that ground themselves. So they came to us, and we gladly funded them, took an equity position in them, and they went out and pegged a tremendous amount of ground. And we kept a royalty on that, and of course we have a share position in them, and they've advancing that right now. And we also did a similar deal with Corvus. The bottom line there is we were able to acquire 235,000 acre% of royalty ground in that very prolific area. Moving on to the Carlin Trend, this is our largest royalty. This encompasses portion of the Leeville and the turf mines on the Carlin Trend, Nevada. Those are both Newmont operating assets. We have a 1% gross smelter royalty there, and since we've owned that royalty, that has provided us with an excess of $13.4 million in production royalties. And then they have a lot of new exploration ground there where they've made discoveries, and they've recently announced that. A lot of that property is firmly on our royalty footprint. So we think this thing's going to be paying out for a long time for us. Moving on to Serbia, we have a 0.5% royalty on the Kukuru Peki or the Brestovac or the Timok project. It goes under a number of different names. Zijin is advancing this right now. They tell us this is going to be in production in 2021, and we think this thing's going to be a real ATM for us. This will probably be a company maker for us. We paid $200,000 Canadian for this thing about 10 years ago. We think ultimately this thing will pay us in excess of $500 million. We think that's good value. That's it. Thank you so much for joining me.